Hey everyone, this is Ben from Cheddar Flow, and last week was absolutely crazy. Literally, those put positions went up 400%, which was the majority. We did cut it there and had some runners even go 500%, which was just crazy. Very, very happy with that performance. I'm glad I did get out of those when I did, when I was up 400, 500% on them, because we did have a massive pickup end of day in that final hour. You can see right here with that pin bar candle right here. It had a huge pickup from lows of day, a big rally to end the day on there. So now what's very interesting with that close, because of what happened with the rally, is two scenarios that I see playing out. I actually do not have a bias towards a specific one. In the past, I've given you my bias. It was very bearish all the way since up here, where we had this fake breakout, then fell down even further, made a lot on that downside. I give you my downside bias and bearish bias. However, here, I do not have a specific bias. However, I can guide you in the two highly likely scenarios that can play out. So the first one, which is the, I guess, less likely one to occur. However, if this does happen, this would be huge if it did. Basically, Monday or tomorrow, we actually have a major gap down. And I shared this in the clip on our Twitter account. Basically, we'd have this big rally end of day with a lot of short covering prior to a major sell day on Monday. Now, this one obviously is something that is very hard to happen, to have like a huge sell day with a major gap down over the weekend. However, not out of pocket, because we've seen prior OPEXs the following day, which tends to be Monday after OPEX, can be very red. So I do caution you on that. And if we do gap down like below something like 3,860 roughly, or so, if we gap down below there, which would be the previous low from over here, that would be very bearish, and could mean we actually sell off quite a bit, because we got picked up a ton of times from up here. But if we gap down below here, that shows a lot of weakness going forward, and this thing can start to really fall with some more accelerated selling, even beyond the point where I was expecting. So that's one scenario, a little bit less likely than this other one that I'm going to share with you, which is this right now is a double bottom. So we have the first part of the bottom here, and then now the double bottom. It's been picked up from lows from under, so it's been picked up from under this low here. That's a very bullish sign. This candle on Friday is a very bullish candle in itself. If you were to look up bullish candles, this pin bar one is very bullish because it did get picked up by the end of the day. So that alone is good. However, the market's very wacky right now, so you do have to be careful with just looking at single candles and just the layouts in general, because a lot of things can be very volatile. But anyways, this is a double bottom, and what I'm expecting on the other scenario is the potential that we do have maybe a 1 or 2 day bounce, and we actually retest up here on this trend line. Now remember, this is the downward channel that we have on the S&P 500. You can see from here, the top is this resistance and the bottom of this is this support. However, we did fall below the bottom of this, and it's been acting as a resistance, and a hard one too. So I would not be surprised if we did retest this around like 4,020 roughly this week. That would not be surprised at all, and definitely could be a potential bounce play on the upside. However, I'm very interested to see how it reacts to testing this again. This would be the third time and major time that we've retested this line. I want to see how strong the sellers are at this level. If sellers are very strong, this thing could fall back down again. And remember, if we get a triple bottom, yes, triple bottoms can definitely bounce off of it. However, lately in this market, it's been very bearish, and a triple bottom would actually be more bearish in my opinion, and there could be a potential short setup on that one. So I'm interested to see this. If bulls want to get over and out of this like really dangerous range while we're under this level right now, they need to get back up above this thing, and we need to get a close above here on the weekly candle. That's what they need the most. The weekly candle would need to close above this level for them, because the longer we stay below here, the more and more dangerous it gets in this market, and it could be continue to fall even further down in a more accelerated fashion. If we can get back up above this level, especially on a weekly candle, that's going to show strength, and they can continue upward. Some other things to note: we did have two actually large call positions happen after hours on Friday. Remember, you could buy options on the S&P 500 and QQQ up to 15 minutes after the market closes. So these people did do this. However, expiration is much farther than the puts we're seeing. So the puts, we've seen a lot of May 20th, which was the expiration on Friday. 6/17 is the expiration in June. We've seen a lot of July puts as well. So it seems that the more medium to longer term outlook is a little bit more bullish, while the near term is very bearish, as you've seen in the previous videos. And that's continued. We saw these after hours as well. Three of these of the 372 strike. All these were above the ask, as you can see here. And they're well above the ask as well. 623 was the price they bought them, while the ask was 618. So that's very bearish to see, especially after hours. And these people are probably taking a bet of the thing that I just shared with you in terms of the first scenario. So if you go back to the chart here on the daily, they could be taking a very large bet on that scenario I shared with you, that we have a big gap down and just continue selling throughout the entire day on Monday. Now, is that very likely to happen? No, it's very hard to predict these. That's why I'm giving you two of these options. If we get that big gap down, I would not encourage you to go long at all, and you could potentially take a short setup during the day and continue to ride that wave down. That'd be one. If we open flat or gap up, this could be a very likely potential of us retesting that trend line like I shared with you earlier. But I think these people that were getting the 372 puts are betting on, hey, maybe we have something happen over the weekend and we have that gap down, and we could just ride those from Friday because we already had exposure in it. One other thing I want to note is on Wednesday, which is May 25th, we're actually going to have the FOMC minutes released. And if you remember, FOMC minutes have actually been a catalyst to sell-offs in the past. I forget what days they were in the past. However, we did have major trend reversals. I think it was like somewhere up here or up here. We had major trend reversals off of the FOMC minutes just because they're sharing a little bit more into what the Financial Open Market Committee was talking about during their conference, and this is just good sense for the market on where inflation and the rate hikes are going. So that's on Wednesday of this week. You do want to be careful with that coming up, especially because we are under this range. If we continue to stay under the top of this channel here, if we aren't able to get back up above this thing could keep falling, like I said. So those minutes are going to be important. A lot of investors are going to be reading those, as well as traders, and it's going to get more volatile. A lot of more hedging probably going into that, which brings me to my next point. The VIX got rejected pretty hard on the daily from this resistance right here. So it tried to get back over it, got rejected twice in a row, which is a bearish sign for the VIX in terms of both of these daily candles that we have on here. And bearish on the VIX means bullish on the S&P 500 mostly. However, the VIX can be very difficult to chart, and in the past has just shot straight through resistances before, as you can see from back in like other days, like over here. We just had major shifts in trend, and even though this daily candle down here was pretty bearish, it literally gapped up the next day and just rallied for a bunch of days afterwards. So check the VIX, and it would be a good sense to see if we get across this like high. We have this heavy supply zone on the VIX up here, which I'll just mark for you, roughly 35.50. If we do get above that and close above that for maybe like 2 or 3 days, that would be very concerning and could definitely make a leg up. But that is for the future. As of now, it is under there and just consolidating for the time being. So that's another good metric to always look at. And just overall, S&P 500 just needs to get back up above this level. I want to see if we're going to get a lot more of these types of calls hitting the tape this week, especially if we don't get that big gap down on Monday, because I want to see if we're going to actually be able to transition to a little bit more of a bullish and friendlier trend in the market. It's been pretty destructive lately, so do be careful. We've had to be careful in the past. So that's basically what I'm looking for. And then one last thing, I'd like to see the dark pools start accumulating a lot of shares under this level, and see if we can use that as a propel and like a springboard to continue up higher in terms of the bulls' favor. So we actually saw Friday a $155 million print on the S&P 500, so that's a decent size. 120 million right here, and then two of these 300 plus million. This one's almost 400 million, honestly. For two of these dark pool prints here. That's a sign in itself if we were able to gap up above this level on Monday. These, remember, dark pools, you never know if it's a buy or sell. These could be sells, and we could make a huge gap down on Monday. We don't know yet, and that's fine. That's not, like people say, oh, you don't know what to do with your data. No, that's a good thing. As of now that we don't know yet, we can play with this on Monday based on where the gap is and where the levels are. Mark these levels, 389.55, 389.61. If we're above it on Monday and close above it, that would be a bullish sign, and these people could have the potential of buying as long as we stay above it for a long amount of time. Inverse, if we have that big gap down, these could be sells, and then watch out, we could continue to sell off. So that's how I like to use these, and personally, I love dark pools. It's my favorite metric to use. But otherwise, appreciate you guys watching this video. Have a great and profitable week, and I'll see you guys next time.